Here. Let me introduce myself again. My name is Luis Araque Connolly. I work for the IRC New York office. Excited to be here and share this valuable information with all of you, especially during this crazy tax season. I'm gonna be presenting with my colleague Kamela Dahan. First, I want to say a little bit of what we do in IRC. So IRC is a refugee resettlement, and social services agency. That as a team, we work closely with refugees and other immigrants that come to the country, and we help them apply for government sponsor benefits and other. We connect them with other different resources that we have at our disposal. So we're going to start this presentation. First, I want Kamela Dahan to introduce herself, and she will be, taking care of the first half of the presentation, and I will jump in for the second part.
Hi, so I'm Kamela Dahan, the tax preparer assistant at IRC. Thank you all for being here today. Together with Luis, we have many topics to discuss today about taxes. And we want to make sure that you have your questions answered in the end of this webinar. So basically, we will cover many topics like the basics of taxes, what are taxes, the types of taxes, the W-4 form, the 1099 form, and many other things like child tax credit, the ITIN, and the difference between the ITIN and the Social Security, and who and how can you file your taxes. So I think you all pay taxes back in your home country, right? But what differs is the types of taxes you paid. So what are taxes exactly? Actually, taxes are required payments companies and individuals pay to the government. So they are mandatory and cannot be avoided. And understanding how taxes work will help you better understand how your money is taxed. So why do you think it is important to pay taxes? Taxes actually are crucial because governments collect this money to finance social projects, and that leads to economic growth. And without taxes, government contribution to many sectors, and including supporting common resources like water, sewer, and maintenance, would be impossible. So we always had this thought, where our money goes. Well, taxes are so important because they go to many different public services. Government usually purchase items, buses and trains, public libraries and parks from these taxes. They fix roads, they pay firefighters and more policing. They are responsible for the transportation, and the taxes finance too the Medicare, the veterans benefits, the education, and many other services that are public and free to all people. And then we have the types of taxes. There are many types of taxes, including income tax, Social Security tax, Medicare tax, property tax, consumption sales tax, federal, states, or local taxes. So what's the difference between these taxes? We're gonna see now. So the income tax is the tax on your earning, and you're earning as companies or as individuals. Earnings can come from diverse sources like salaries, wages, dividends, interests, and many other things. Another tax we can talk about is the Social Security tax. So the Social Security tax is the tax that withheld from both the employee and the employer to fund the Social Security programs. They fund the retirement, for example, and the disability. Employers usually withheld this tax from employees' paycheck and forward it to the government. So if you are employed, you may notice a line on your pay stub for Social Security or Medicare tax. So what is Medicare tax? Medicare tax is a federal employment tax that funds a portion of the Medicare insurance payment, like Social Security. And like Social Security, Medicare tax is withheld from the employee's paycheck too. Other tax we can talk about is the property tax. It is based on the land value and the property assets you have. This tax is based upon the property or the real estate companies, individuals, or businesses have. So it's good to know that every county or every local municipality has its own tax rate. We have also the sales taxes or consumption taxes. It is when the customer pays the sales taxes to the business, which then remits it to the government. These taxes are on goods purchased, like groceries, food, clothes, and other items. All of these, they can be categorized under like federal taxes or state taxes or local taxes. But what are the differences between federal taxes, state taxes, and local taxes? We're gonna see. So federal taxes are collected by the IRS, which is the International Revenue Service, on the yearly earning of the taxpayer, whereas the state taxes are collected by state governments. Those taxes are used maybe to pay state bills or provide certain state programs. It's good to know too that state taxes differs from one state to another. Whereas local taxes, these funds local public services ranging from education to like garbage collection and sewer maintenance and many other things. Local taxes can differ from one municipality to another too, and they can come from, let's say, a property tax. Property tax is a local tax too. Payroll taxes, sales taxes, and many different other things. So the majority of taxes can be broken into three main categories. The first is the taxes on your earnings, which is from your job, which can be classified into payroll employee or non-payroll employee, which we will discuss this later on the other slides. So basically, it's divided into three categories: taxes on your earnings, taxes on the things you buy, and taxes on the things you own. So let's see what is payroll employees. So when an employer is employed by an employee, he's called a payroll employee. Whereas if he's self-employed, he will have the non-payroll employee and he will get the 1099 form. Whereas here in the payroll employees, he got the W-4 form. This form determines how much the employer will take from your paycheck for taxes. So let's see how to fill out this form. We will discuss how to fill it. So as you click on this form, you will see 4 pages. The form itself is only 1 page. The rest are just like instructions and worksheets. This form contains of 5 steps. The first step and the last step, which is the signature, are mandatory and everyone should do them. Step 2, 3, and 4 are optional. Only if they apply to you, you should do them, whereas you only skip from step 1 to step 5. So let's see. Here in step 1, you just enter your personal information. You enter your first name, middle name, last name, your social security number, your address, your city, state, zip code, and you should make sure that the name that you type here is similar to the name on your Social Security card. In C, you will choose your filing status, which is single or married filing separately, married filing jointly, or qualifying widower, head of household. How do you know these? Luis, we're gonna elaborate more about the filing statuses and let you know how to know which one are you. So when you fill step 1 and you apply for step 2, you go into step 2. Here, you would write the correct amount of withholding depending on your income earned from all of these jobs. So if you have multiple jobs or your spouse work, you should fill out step 2. So step 2, you only have to do one of the following. You should put A, B, or C. A, you choose it if you choose to use the estimator at www.irs.gov for most accurate withholding. B, you may choose it if you might choose B, so you go into the instruction worksheet and just state the number as is. C, you can choose it, but you and your wife must put C as in her form and in your form. So, and then when you finish step 2, you have an option to fill out step 3, which is claiming dependents. If you have a qualifying dependent, you may fill here. If they are under the age of 17, you might put 2,000. If you have more than one dependent, you should multiply the 2,000 by 2, which is 4,000, and you place it on the line beside qualifying children under age 17. And then if you have another dependents, which might be your elderly grandparents living at your house and you are paying more than half of the payments, you can claim them as dependents and place 500 for every dependent. So let's say you have 2, you place 1,000. And on line 3, you add these 2 numbers. Let's say in this case 2,000 and 500, you place on line 3 2,500. Step 4 is for other adjustments if you have any other income or deduction you want to claim or anything like that. And finally, in step 5, you sign in the employee's signature and put the exact date. And down, it's only for employers, they fill it out. But you have to make sure to fill this form before your first day of working. Can you, yeah. So now the non-payroll employees, non-payroll employees, as I stated before, are people that receive, in other words, people working and getting paid as contractors or paid cash receive this form. So in the W-4 form, normally the rate is split half and half between employers and employees. But since independent contractors don't have separate employers, they are on the hook for the full amount. So how do you pay your 1099 taxes? So let's say you think you might owe $1,000 in federal income taxes. You should be making payments throughout the year, not just when you file your return. For example, you would divide that amount by 4 and make your quarterly tax payments on schedule. So now Luis is gonna say filing your taxes, how to file it, and some child tax credits, eligibilities, and other things. Thank you so much for listening to me. Luis?
I will be taking part on this second part. We're gonna talk about tax filing deadline. Usually tax season starts at the beginning of January until mid-April. This is the reason why you have to file taxes, basically, to provide information to the IRS, to put it in plain words. This is a way, for the government to see if you paid the taxes that you were supposed to. Sometimes you might get tax money back, sometimes you might not. I want to say, though, that every year the deadline is April 15. Last year, due to Corona and other situation that happened, it was moved to and extended to July 15. This year, that's not the case, but it's still not April 15 because April 15 was landing on a holiday. It was moved to April 18, the deadline. It's a pretty good information to keep in mind when filing taxes that the deadline is April 15 for this year. Who should file taxes? Well, if you are under 65, if you have an income at the very least of 12,550 and you're single, you file taxes. If you're married and the minimum income is 25,100, if you are over 65, of course. If you are head of household, is 18,800. If you're a qualified widower, is 25,100. This income can include work income, as Kamela mentioned before, the W-2 that reflects the work income. It can include unemployment income. And this is, I see a lot of people committing a mistake with unemployment income because the IRS, they do not send you the form that is basically the summary that explains the income that you receive through unemployment. And a lot of people don't even know they have to declare it. Most cases, people think that because they didn't, work for that money, they don't have to declare it. But that's a mistake. Even if it's money that you didn't work for, is on earned income, you still have to declare it to the IRS. And there's a way to get that form, the 1099-G form for unemployment. The same account that you use to certify your weekly benefits every week, there are options there to view and save, so you can print the 1099-G form that you need that reflects the money that you received through unemployment last year, as well as Social Security. I have to say for Social Security benefits that when it goes to when it's below 25,000, that income is not taxable. If it's between 25,000 and 34,000, that at 50% of the income is taxable, and if it's over 34,000, it will be fully taxable. This does not include public benefits. If you are self-employed and you make income at the very least 400, you have to declare taxes, you have to file taxes. Any cash income needs to be reported to the IRS in case you're making money, and you're getting paid through cash. And this is the good thing. You might be, if you file, you might be eligible for refund or credits. Let's talk about a little bit about asylum seekers. I know a lot of you are asylum seekers and have concern about your status and if you should file. The straightforward answer is yes. If you have income, yes, you have to file, because asylum seekers are considered, resident aliens. They must follow the same tax law as any other U.S. citizen. I know some of you are waiting for interview, but asylum seeker, even though they're not green card holder, while they're waiting, they're still considered, their status is similar to a green card holder, which makes them resident aliens. I know there's a situation where you don't have access to Social Security, therefore you cannot file taxes. But when you don't have access, we have something called IRC number, who can replace the Social Security number for tax purposes. But we're gonna talk a little more about that in the following slides. Let's talk about one of the most important credits out of all of them, which is the child tax credit. The child tax credit is the tax benefit granted to American taxpayer for a qualified dependent or child. Some taxes can be refundable, some taxes can be non-refundable. We have certain taxes on the refundable side and certain taxes for non-refundable. Child tax credit just happen to be a fully refundable tax. To put it simple in words to see to distinguish between the two, a refundable tax is that tax that not only will help you reduce, or in the best case scenario bring down to zero your tax liability or money that you owe to the IRS, but the remaining balance will be added as a refund. As on the other side, on the other hand, for a non-refundable one, it will definitely help you, to reduce or bring down the tax liability or money that you own to zero, but the remaining balance will not be added as a refund. I will explain a little bit more on the following slides about refundable and non-refundable. How much is the credit for the child tax credit? Well, I have to say that usually the child tax credit used to be $2,000. This current tax year, it was increased to $3,600 for children who are 5 or under. For qualifying children who are between the age of 6 and 17, you get $3,000. And you must be wondering, how do I get it? How do I get the child tax credit? Well, as simple as might be is just filing your taxes. That's the way you to get the credits. And which brings us to our next question. Are you eligible? Let's find out. It's gonna talk about child tax credit eligibility. Well, first, obviously you have to have a qualified child who is under 18 in order to qualify. That child should have at least lived for half a year with you. And I wanna point out, in order to be a qualified child, you also have to provide at the very least half of the support of keeping up that child. You must have a main home in the US for at least a half a year as well. And there's certain income thresholds that you cannot exceed. For example, if you're filing single, which is the most common one, if your income exceeds $75,000, your child tax credit will start phasing out. Will start being reduced every 50 for $1,000 that you exceed. If you're filing jointly, since it's a combined income, the limit is $150,000. Otherwise, your child tax credit will stop being phasing out. And it's important to provide, the right information to the IRS. I know it's a lot of money. I know this is help for a lot of people, but oftentimes, there's a lot of people who they try sometimes, some people because they're unsure, some people because they want to get advantage, of the credit. And it's understandable because it's a lot of money that helps a lot of families. But I will always suggest try to provide accurate information as much as possible. We got to be sure that you're providing the right information, because in the worst case scenario, IRS will, even if they give you the money, they might ask for that money back, or they will outdo you, and they will ask for proof, extra proof, to make sure that the actual information that you provide in your return is correct. So always try to provide the most accurate information. So as I explained before about refundable and non-refundable, here we have a clear example. Before I said refundable is the money, the credit that not only helps you reduce or pay down to zero your tax liability or money that you own. And non-refundable is the opposite. They do help you reduce it. They do help you bring down the tax that you owe to the IRS, but whatever is remaining, it won't be added as a refund. So here we have a good example. Let's assume, I just want to clarify that these amounts on this example do not represent the actual amounts for the tax credit or any credit. This is just a plain example. This is just for example purposes. So let's assume you own $2,000 in taxes. And let's assume that you're getting a credit for $2,500. And let's assume that this credit is a non-refundable one. We're going to call this, for example purposes, the X credit. It's a non-refundable X credit. And you own $2,000. So what happens? This credit, we're going to take $2,000 from this credit to bring down to zero the money that you own, the tax liability. And you might be wondering, what happened to the other $500? Did they get it or not? The straight answer is no. Since it's a non-refundable credit, this remaining balance will not be added as a refund. On the other hand, now let's assume you're getting a child tax credit instead of X credit. And as we said before, the child tax credit is a fully refundable credit. So what will happen? Basically the same process. We bring down to zero your liability, the 2,000 money that you own. And the big question, are you getting the 500? Yes, you are getting the 500 as a refund, because the child tax credit happens to be a fully refundable credit. Let's talk about advanced child tax credit. So this is a very particular situation for this year. So as the name says, it's an advance payment of the child tax credit that you were supposed to receive this year. So last year, the government, to help a lot of families, that got hit by Corona, they provide an advance payment, which was split in 7 equal payments throughout 7 months. And they're providing this year a letter for those people who received that benefit last year. The letter is called the 6419. That's the number, the name, letter 6419. And here we can see a sample what it looks like, the letter. The letter basically is a summary of the income that you received last year, as that is reflecting the advance payment that you received for child tax credit. I just want to clarify so you can understand why this letter is so important, why it's so important for you to bring it to your tax preparer while they're prepping your taxes. Because let's assume this is just an example. Numbers do not represent. This is just an example. Let's assume you were supposed to receive 3,000 this year in child tax credit, and let's say last year you received 1,500 as an advanced child tax credit payment. So when you bring this to the tax preparer, all he's gonna do is input this information, that you received that money, and it will adjust the child tax credit money that you're supposed to receive this year. 3,000 minus 1,500, the remaining balance will be 1,500, correct? So basically that's what it is. This letter is a summary of the money that you received before. And obviously this is only for the people that applied for, if it applies for you, if you did receive the money. If you didn't receive any money last year, as a advanced child tax credit, you shouldn't worry about this. But for those who did, this is pretty important information that you need to bring to your tax preparer in order for your taxes to be, corrected, especially the child tax credit if you qualify for it. Good thing about this letter is it can be received in the mail. Actually, I have a lot of clients who have received this letter in the mail successfully. But in the odd case that you do not receive it, you can always access this online. There's actually a link here where you have to create an account, some basic information, and you should have straight access to the letter online, and you can print it and bring it to your tax preparer. Very important information. Let's talk about filing status. So filing status basically determines the rate at which your income is taxed. That's all it is to it. And you must be wondering how many filing status are. Well, let's find out. We got 5 different filing status, which we have single, married filing jointly, married filing separately, head of household, qualified widower with a dependent child. Let's talk about the first one, the single. I know this might be common sense, but well, this title normally applies for people who's not married. People who's not married, if you're legally divorced or you're legally separate under the state law. For married filing jointly, obviously this applies for people who are married. This is a way for you and your spouse to combine their income, the income and file together. I must say that in the odd case that your spouse died the year before, you might still have a good chance to file as married filing jointly the next year. I'll say this one more time. If your spouse died the year before, you can always, qualify to file as a married filing jointly. Let's talk about married filing separately. So basically this applies for, couples that they just want to be responsible about their own income, or they don't want to share the income, they don't want to combine it. This sometimes can benefit couples because sometimes they do this because the tax income that they're gonna own or they're gonna receive might be beneficial. They might receive more filing separate than filing together, or they might own less money. So it's always good to ask the tax preparer to see which filing status, is better for you, is a better fit for you, because sometimes you might qualify for more than one filing status. Let's talk about head of household. In most cases, the status qualify for people who's not married, and they've been keeping half of the cost of keeping up a home by themselves, and they have a qualifying child. Lastly, we have qualifying widow or with a dependent child. Basically, for this status, if let's say your spouse die as a survivor, you must remain unmarried for the very least 2 years. You must remain unmarried at the very least 2 years following the year of the death of your spouse in order to qualify for this status. The taxpayer also must have at the very least a dependent child and, pay for half of the cost of the household.
Luis, we'll want to try to open up the floor to people's questions just as soon as possible. So I just wanted to flag that. Thank you.
Okay. And what documents do I need to bring? Well, this is very common information: Social Security number, tax ID number. If you have a spouse, same information along with the date of birth. Social Security, if you're claiming any dependents, you need to bring the Social Security. And some places you might need proof that they live with you, but at the very least half a year in order to claim. Tax papers, Kamela mentioned before, W-2, 1099-G, which is for unemployment, Social Security, 1099, in case you're receiving money in cash, the letter 6475 that we explained before, with the advanced child tax credit. And if you're trying to get money as a direct deposit, you should bring your routing and account number, basically your bank information, or if you owe money in order for the IRS to be able to take that money from your account, or you can mail payments too. How to file taxes? Well, there's many ways. If you know how to file your taxes, you can go to the IRS link and feel free to file by yourself. We have IRC Beta, where we're providing, offering in-person tax and virtual tax preparation. By the end of the presentation, we'll provide Cassidy, with a link in case you guys want to book an appointment, or you guys want to do virtual or in-person, whichever you prefer. There's also places such as H&R Block. I worked there before, so they're professionals, and it's a very good place if you want to be more sure about your taxes or have more questions, or you want a second opinion. Let's talk about real quick about ITIN number. So ITIN number, or individual taxpayer identification number, is a tax processing number only available for certain non-resident and resident aliens. And you must be wondering, who are non-resident aliens? Well, non-resident aliens are people who are not citizens, and they have not they're not green card holders, and also they don't have a status such as asylum seekers. On the other hand, resident aliens are people who are not citizens, but they might be green card holders, or they might be asylum seekers, to put an example. So we have difference between Social Security and ITIN number. Here on the left, you can see the Social Security card. I'm pretty sure everybody's familiar with. On the other side, we have an example of what the ITIN number card looks like. As you can see, it's pretty different, but they both have one main purpose, especially the ITIN number, which purpose is mainly for tax purposes. That's what it was created in 1996 by the IRS as a program in order to help those people who cannot acquire a Social Security card, so they can use this instead as a substitute to file taxes. Among some of the difference, the Social Security card is for U.S. citizens and authorized, non-citizen residents. Social Security is needed to work, to claim public benefits and, other Social Security benefits and pensions. Social Security also functions as a national ID that can be used across any financial and service and medical services. On the other hand, the ITIN number is for residents with foreign status, such as undocumented aliens, non-resident aliens, and the people that conduct business in the U.S. So you must be wondering how can you apply for IT number? Well, we have a form W7, which is a pretty basic form, basic information that you can file. Usually this form, you can file it at any site, free tax prep site or paid sites like H&R Block, they can file it for you. The good thing about it, if you have an existing IT and you want to renew it, you can do it when you file your taxes. You can send the W7 along with the tax return and all the identity information that you need. And in case you don't have one, you can go to one of these places and they can help you out, file this form and send it to the IRS. And the basic information that the W7 requests is, a reason for the IT. Main reason, pay taxes, file taxes. That's the main purpose. Name and address, birth date, country citizenship, foreign tax ID number. If you have it, if it applies to you, a US visa number, if you enter the country with visa, and identity documents, very basic information. And where you can apply for this? Well, you can mail it. You can mail your W7, as I mentioned before, along with your tax return, proof of identity, foreign status document to the IRS, or International Revenue Service. You can apply for the IT in person using services for an IRS authorized certifying accepting agent. This will prevent you from having to mail you proof of identity and foreign status documents. Or you can also make an appointment at any designated IRS taxpayer assistance center. And after processing, you should be getting that in the mail. As far as for how long, you might be wondering how long does it take? Well, it should take no longer than 7 weeks. 7 weeks. So you can get once is processed and accepted, and let's say they don't require any extra information. If they do, they will send you a letter requiring extra proof to complete your W7 application or your IT number application. It should be no longer than 7 weeks. So from 1 week to 7, that's more or less the timeline that you should wait in order to receive a letter like this with the IT number information. So we have a summary of what we learned today. Taxes are required payment by both individual and corporation to federal, state, local governments. Taxes are mandatory if you meet the criteria and you have certain income, is mandatory. We also learned that there's 5 filing statuses, such as single, married filing jointly, married filing separate, head of household, and qualify with or without a dependent child. We also learned with Kamela the different type of taxes, income tax, Social Security, Medicaid, property tax, sale tax. It's important to know that this tax season starts between January and it ends on mid-April. For this current year, the deadline is April 18. Of course, don't forget to bring your Social Security ID card. This is a common mistake that a lot of taxpayers make, that they don't bring this information. And without especially without the Social Security card, we cannot do your taxes. It's really important that you bring these documents every time you file your taxes. And of course, any other tax form, like W-2 or 1099-G, the letter, all taxable forms that you receive in the mail. We also learned the Social Security number and ITIN are not exactly the same, although ITIN is considered a replacement for tax purposes of the Social Security number. And we also learned the specifics and requirements for be eligible for a child tax credit and what it consists. So I think we'll learn a lot today, a lot of valuable information that you should know. And also, I wanted to talk a bit about IRC Financial Services. So I was saying before, I'm the financial coach for IRC. We try to help people if you have any, financial crisis that you're going to, or you have any ideas, but you're not sure about it, and you want any reassurance, financial reassurance. We provide with financial classes for credit, banking, tax preparation, We help with free tax prep. I will provide Cassidy with the links so you guys can book appointments if you haven't done your taxes. We also assess people with small loans. So when I say loans, I mean loans such as credit building loans in case you don't have a credit and you want to start building a credit. We provide small loans that help you build your credit. Down below is my contact information.